Webull finished the week with a very strong session, pushing through the $15 mark and closing Friday at $15.16, up 52 cents or 3.5%. That's the highest closing level we've seen since the rally earlier this week. For 3 straight sessions the stock hovered around $14, consolidating after a big Monday jump. On Friday it broke out again, and that has a lot of investors wondering, is this the beginning of a bigger run for Webull, or just another short-term spike in a volatile stock? Let's break down what's been happening, what's behind the move, and what it would take for this rally to keep going. The first thing to note is that there hasn't been a single major headline or earnings release on Friday that would obviously explain a 3.5% move. Instead, what we're seeing looks like the cumulative effect of several developments over the past couple of weeks coming together. One of the biggest is that Webull has been gaining recognition as a legitimate growth and leadership stock in the market. Its relative strength rating, which compares a stock's performance to the overall market, recently climbed into the low 80s. That puts Webull into what chart watchers call leadership territory. When a stock crosses that threshold, it starts to appear on screens and filters used by momentum traders, quant funds, and institutional investors looking for strong names to buy. That can attract a wave of new money even without fresh news. Another factor is analyst coverage. Rosenblatt Securities initiated coverage of Webull with a buy rating and a $19 price target, citing its international expansion, crypto reopening, and an attractive valuation relative to peers like Robinhood. That kind of endorsement acts like a stamp of legitimacy for many market participants. It signals that institutional analysts are taking the company seriously and see upside. When a respected firm says a stock could be worth $19, it provides a narrative for traders who are already eyeing the name technically. The fundamentals also support the story. In its most recent quarter, Webull posted revenue growth of about 46% year-over-year. Trading-related revenue jumped more than 60%. Customer assets hit record highs, which means not only are new users signing up but they're funding their accounts more heavily. The company also reintroduced crypto trading in the United States, integrating it into its main app, which can drive engagement and revenue per user. Crypto trading is high margin and volatile, and when digital asset volumes increase, platforms like Webull benefit disproportionately. On top of that, the company has started its European expansion, launching in the Netherlands to gain a foothold in the EU. That opens the door to millions of potential new customers. Combine those fundamentals with a favorable macro backdrop and you get a potent mix. Rate cut expectations and renewed enthusiasm for growth and fintech stocks have been supportive. When the environment is risk-on, investors are more willing to bet on companies like Webull that are scaling fast but still unprofitable. On the chart, the price action has been textbook. For weeks Webull traded in a range between about $12.5 and $13.5. On Monday it broke out to 14, then held that level for 3 sessions, essentially building a new base. On Friday it pushed above 15, breaking out again. This kind of stair-step pattern, where a stock breaks out, consolidates, and then breaks out again, is exactly what technical traders look for when identifying leaders. It suggests that buyers are absorbing supply at higher levels rather than chasing unsustainably. All of this sets the stage for a potential bigger move. With the stock now above 15, the next levels to watch would be around $15.5 to $16 for minor resistance, and then psychological milestones like 18 and 20. If Webull can continue to execute and the market stays supportive, those levels aren't out of the question. But it's important to be realistic about what needs to happen for the rally to continue. The first requirement is sustained revenue growth. The 46% year-over-year figure is impressive, but investors will want to see that trend persist in the next quarter. That means trading activity, both in equities and options, has to remain strong. It also means the crypto relaunch needs to drive incremental revenue rather than just being a headline. The second requirement is international traction. Early signals from the Netherlands launch will matter. If Webull can show meaningful user acquisition in Europe, analysts will start to model in much larger addressable markets, which can justify higher valuations. Without that traction, the stock may struggle to hold its multiple. The third requirement is a supportive macro environment. Fintech stocks like Webull are sensitive to risk appetite and interest rate expectations. If inflation surprises or the Fed shifts tone, risk-on sentiment can evaporate quickly. A favorable backdrop with rate cuts or stable policy helps underpin valuations and momentum. There are also risks to consider. Webull is still unprofitable, and losses have widened as it spends on marketing, compensation, and infrastructure to support growth. Investors will tolerate that for a while, but at some point they will want a path to profitability. The company also has a $1 billion standby equity purchase agreement with Yorkville Advisors. That capital flexibility can be reassuring, but it also raises the risk of dilution if the company issues shares aggressively. Competitors like Robinhood, Fidelity, and Schwab aren't standing still either. They're innovating, cutting fees, and launching their own features to attract and retain customers. And while crypto trading is a growth lever, it also ties Webull to one of the most unpredictable markets out there. If crypto volumes plunge, the revenue boost could disappear. From a technical perspective, traders will be watching volume closely. A breakout above 15 on strong volume is a good sign. If volume fades, the breakout could fail, leading to a pullback. The $15 level now becomes a test. If the stock can hold above it and consolidate, it strengthens the case for continuation. If it slips back below 14.5 or 14, it would suggest the rally isn't ready to sustain. So how do you frame this for a pre-market video on Monday? Start by recapping Friday's move. Webull closed at $15.16, up 3.5%, breaking out above 15. Emphasize that this is the second breakout in a week, following a consolidation at 14. Highlight the key drivers: analyst initiation with a buy rating and $19 target, RS rating climbing into the 80s, strong fundamentals with 46% revenue growth, crypto relaunch, and European expansion. Explain that these factors are converging to push the stock higher even without a single fresh headline. Then outline the roadmap to higher levels. What would it take to reach $18 or $20? Sustained top-line growth, traction in new markets, and a favorable macro backdrop. Break down the technicals. 15 now as support, watch 15.5 to 16 for minor resistance, and the importance of volume confirmation. Balance it with the risks: unprofitability, dilution risk, competition, and crypto volatility. End with a balanced but optimistic outlook. Say something like, the breakout above 15 puts Webull firmly on leadership watch lists. If the company continues to execute and the market stays supportive, there's a clear path to higher levels. But execution and market conditions will determine whether this rally is just getting started or about to hit turbulence. That's the kind of pre-market framing that both educates viewers and sets expectations. It shows why the stock is moving, what catalysts matter next, and what levels traders should watch. It positions Webull as a dynamic growth story with a credible shot at higher prices, while reminding your audience that nothing is guaranteed. So to sum it up, Webull closed Friday at $15.16, up 52 cents or 3.5%, breaking out after consolidating at 14. The move appears driven by a combination of technical momentum, analyst initiation, strong fundamentals, and improving sentiment. The path to higher prices depends on sustained growth, traction in Europe, crypto adoption, and a supportive macro backdrop. The $15 level now becomes a critical test. Hold above it and the rally could continue toward 18 or even 20. Lose it and the breakout may need more time. What do you think? Is Webull's rally just getting started, or is it already priced in? Share your thoughts in the comments, like the video if you found this analysis helpful, and subscribe for more updates on Webull and other fintech growth stories. Thanks for watching, and I'll see you in the next one.